Oh, can you believe it? I don't know if you can, but I know I can believe it. I just went ahead and actually, that's right, I added a new position to my portfolio, and you see it listed here. It's Stitch Fix, and I just made a video about it yesterday, talking about what I thought about the stock after an earnings report, which we'll get into. But today I'll be talking to you about why I went ahead and made this purchase. So let's take a quick look at the position. So Stitch Fix here, um, right here. Uh, Obviously no bueno stuff already, but cost basis of 1585 here on Stitch Fix. 7 shares. So really it's a small position, only $100 position. Looking to see what it could lead me to in the future. If you look at the history of this company, obviously they were an IPO in the 2017 range, late 2017. At one point, the stock was up around the $50 range, and right now, selling down around the 15 range after a nearly 50% price drop in one day. Today, down 27%, which is again based off an earnings report. So this is how much they were down 40% after hours. Opened the day up around 29% down. So looking to make a purchase, and I did the 1585 range. Obviously, that's just because when I got off work, that's right, I've been working overnight, so it's been a little rough. But you know what? I get home right as the market's opening. Around then, I get off work at least right around the market's opening, so that's pretty cool. So I went ahead and made a little purchase here of Stitch Fix. Let's talk about Stitch Fix and what it is. So Stitch Fix is a company which I might describe as the clothing retailer of the future. This is a company that sends you clothing. It's kind of like it's the best way to say it is like a loot box. So this is going to be a company that'll send you a selection of products being specifically clothing items, every month, and pretty much you get to try them. If you want to purchase one of those items, you can go ahead and purchase them, and you typically I believe it's $20 off the price of that item, because there's a $20 service charge fee. Really, if you don't like them, then you're paying Stitch Fix. If you don't like them and you return them all, you're paying $20 for that monthly delivery you had. Otherwise, you can pay for it and $20 off the purchase price of the item that you purchase. So obviously, it's an interesting business model in that aspect, where clothing obviously online is selling. People, I mean, let's be fair. I don't know if it's necessarily as applicable for men as it is women, and that's why women are a very big majority of their audience right now in terms of actual sales. Women make up the vast majority of their revenue, and it's for a good reason that women are a lot more likely to want different outfits regularly than men are. To be fair, men aren't picky about the clothing they wear typically. I can't say that forever, but I will tell you, I certainly am not picky. I mean, I've had the same shirts for several years now that I still wear. Obviously, one thing is, obviously, same body type, which, you can say that as a positive or negative thing, whatever you like to say. But regardless, I'm not picky about what I'm wearing, okay? I don't necessarily need a new outfit every month, a new 5 outfits or whatever it might be. But I think it's a really interesting business model. And I've mentioned before that obviously I think clothing retailers will be something that exists long term as far as the physical aspect of it, because people do want to actually test out and try out their clothing in store and see what sizes feel like. That's why I kind of like where this Stitch Fix is oriented. So they're focused on giving you that temporary benefit, so you're not sold into a commitment when it comes to the clothing you receive. So that's what I kind of like about what they're doing. It really just makes sense to me, and I'm a huge fan of it. Obviously, you see at the top here, you can take a style quiz. So pretty much they send stuff based off of this algorithm, how you answer these questions, what you're interested in style-wise. They'll send you items that obviously would match something that you would most likely wear. Obviously, with the goal of selling that item to you, it's typically better for them to sell the item to you. you see how Stitch Fix works. So tell us your price range, size, and style. You'll pay just a $20 styling fee, which gets credited towards a piece you keep. That's right. Piece or pieces. So really, it's just the $20 flats, but it's $20 subscription fee, which is that styling fee, which is them picking out outfits for you. You can get a fix when you want. Try on pieces at home before you buy. Keep your favorites, send back the rest. And they also offer free shipping, returns, and exchanges. Obviously, because this is just how this makes sense as a business. They can't do this kind of business without free returns or exchanges, and especially not with the free shipping. It's just very beneficial for them. And no hidden fees ever. No hidden fees ever. Prepaid envelope is sent with you for a return as well. Very cool. You have endless styles. You got this lady with the Dijon mustard. This dude who's got the, I don't know what kind of shirt that is, but it's definitely some weird cashmere. This little kid's got some cheetah prints. This girl's got jean jacket, as is usual. We got another facing of Dijon mustard over here. And then this dude's got a trench coat. Looks like he might show his willy in the park. So I don't really trust that guy, personally. They have women's sizes from 0 to 24W, which, obviously a little bit wider, they got plus petite and maternity. Maternity, obviously, you need some big waisted items because the baby just keeps growing. Men's from extra small to triple XL, waist is from 28 to 48, and inseams from 28 to 36. Including big and tall, so not a very, very wide range as far as the men's side is concerned, but definitely plenty fine in terms of that range anyways. Some of the brands that they actually carry from, this is where it's going to get rough, because I'm not a clothing guy. Let's just be fair. I wear sports clothing. I wear athletic shorts. That's what I wear. So this is going to be rough for me. We have Madewell, maybe? Michael Kors, everyone knows Michael Kors. Calvin Klein, Bonobos, Kate Spade, which obviously this relates also to my favorite, one of my other newer positions, Tapestry brands too. So just saying, we got Eileen Fisher, Sanctuary, Eloquii, sure, Mountain Hardwear, Free People. That makes some more sense. Sounds like a hippie stuff though. So Mavi, Toms, O'Neill, Vince Camuto, Ledbury, Ralph Lauren. That's right, they got Ralph Lauren's. Flag and Anthem, Page, Threads and Thoughts, and that's right, Grayers. Grayers sounds good to me. So that's Stitch Fix, what they offer. Interesting company. I'm a huge fan of what they offer. Obviously, they're really looking to expand that men's segment, and that's a huge segment for them, really, if they get that going. What I like about this company is, for a future-oriented, right now, I'm a long-term investor, so I'm investing in stocks that look good for the long-term perspective. And anything really oriented on the future of retail, such as e-commerce, I'm a huge fan of. So these are the type of companies that I like to be involved in because it's something that's going to be a more viable business model just down the road. If you think about it 5 years out, people are only looking for more and more convenience, and this is a convenient thing for them. So why did I choose Stitch Fix? Obviously, we look at these earnings. In which they beat by 4 cents on an EPS standpoint, 11 cents EPS, and a revenue for the quarter of $451 million, which is a 22% year-over-year increase. But they did miss by $0.79 million. Honestly, all things considered, this earnings report was, I think, a little bit blown out of proportion, and I understand the guidance was cut a little bit, and there's a good reason for guidance cuts. These retailers, these clothing companies, a lot of the places that they get their supply, to be fair, it's going to be made in China. And obviously we're going to have some supply chain issues. And that's going to be included in this is weaker guidance. So nothing too absurd. And their guidance is still calling for a quarter-over-quarter increase, which is still around a 20% year-over-year increase. So all things considered, I'm not too upset about it. If we look at the revenue of this company, what they have to offer, So overall, you see a consistent growth in revenue since 2016 on this company. Very nice. And this is not small growth in revenue. This is a good growth in revenue. Even on the trailing 12-month perspective, it's good growth. From a gross profit perspective, I like seeing that. So you see a growth in profits, but you also see a growth in operating expenses, which makes sense because a lot of this is, it's all really set from SG&A here. That's all their operating expenses there. So overall, net income line is pretty weak, to be fair. They make a good profit, but that net income line is weak because the high amount of, SegOp expenses, which doesn't shock me, because it's an online company and they're going to pay a lot in terms of these expenses to keep that site running, as well as pay for shipping, return shipping. It makes sense. And for this only $20 fee, I don't know if it's something that they're going to change maybe in the future, but I do think it's something worth considering. This business model could change in the future for sure. So if we look at estimates, actually, this is a company right now making revenue around the $1.9 billion for this year expected. That's the average estimate there, which is 21% growth year over year. Next year, they're expecting a $2.29 billion number, which is a 20% growth year over year. Very, very nice growth is still expected for this company. EPS could be a concern for sure, as you see. So average estimate for EPS in 2021 is actually expected to be a lot more profitable. You see a 24-cent EPS line here, whereas current year they're only expected a 0.7, really a 7-cent EPS line, but they're expected a 24-cent EPS line in 2021 on average. High estimates of 0.36. Could be interesting to see that. That's something that obviously you'd like to see because from a year ago in 2019 they posted a 3.36 as well, so a 36 cents EPS on their line as well. Definitely interesting to see how that goes. The other thing I look at, and I do, is the balance sheet. Balance sheet on this company, you know what? It's freaking good. It's actually a good balance sheet for this type of company. And I'm not the kind of guy who plays with IPOs typically. And this is a 2-year-old IPO, but still, I don't typically play with IPOs. This is a company that I kind of like the valuation here. After this 30% drop, I think it's pretty okay. So you see from current assets, from cash and cash equivalents, obviously a good number there. 165 million going on there for cash and cash equivalents. Not down too far from August of 2019. Pretty similar. You see a lot more in terms of inventory. Stocking up on that extra inventory obviously makes sense. So from a total current assets perspective, they've got $486 million in total current assets. Total assets of $799 million, but we care about total current. I think it'll be worth looking at, but it'll be worth looking at both. So from a total current liabilities perspective, they've only got $220 million in the total current liabilities aspect, but total liabilities of only $360 million. So that's, again, in terms of assets, they've got 486, and that's up against $220 million. So definitely they've got double the amount of current assets, and from a just normal total assets, they've got $800 million in terms of total assets versus a total liabilities of 360. So again, double that. These are numbers I'd like to see. I like this balance sheet, and I like what this company has to offer, and I think it could be a good long-term investment, and that's why I'm involved. I might pick up more shares if it continues to drop under my cost basis. We will see. I've been putting a lot of money in the market now, obviously, so I'd like to see what goes on there. But if you take a look here, obviously, let's forget about the fact that it's gone down quite a bit more, but it keeps going down. I might just pick up some more today. We'll see. I like the prospect of this stock, so really hope you enjoyed. Let me know what your opinions are of this, so I'll let you know too. Yeah, absolutely.